Machita, baby. Hi, and welcome again to another edition of Daily US Pre-Market Analysis for today, September 29th of 2025. Let me get ready. Let me get the disclaimer out the way. Welcome, Sono. Welcome, Mighty Salam. Let me get the disclaimer out the way. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. Welcome, Fabrice. All right. About your host, I'm Gio Vanacour, a senior market analyst, market educator, and demonstrator of strategies with Vantage, bringing over 20 years of experience as a commodities trader and a whole license, a Series 3 license, which is the license that you need to use in the States to be a commodities or a futures trader. If I was to be a stock trader, I would need the Series 7, but I'm not. All right, agenda for today: economic calendar, what's moving the markets, identifying key levels of support resistance, and looking for trades with Fibonacci tools. That's our main objective here, looking for trades. All right, about Vantage real quick. The ecosystem of Vantage offers over 1,000 instruments, over 100 sharp patterns, over 100 technical tools, offering CFDs on Forex, indices, shares, commodities, and cryptocurrencies. What we stand for: lightning fast execution, award-winning 24-hour support, intuitive tools, reliable connectivity, and a strict regulation. Identify clear, consistent trading habits. This is something that I like to share with all of the traders. I believe that you do need to, just as in life we have habits, having clear, consistent trading habits, it's a must for all traders, as well as being comfortable with the prospect of losing money if the market goes against you, which you will have losing trades, but obviously you want to work on those losing trades. By emphasizing risk management, I like to bring your attention that using percentages wise when looking at your account rather than the dollar value that it holds, you will help you psychic in controlling your emotions, and risking 1% of your account balance or account value, between 1 and 2%, will keep you alive for future trades. All right, volatility can spike and spread can widen, so reducing your leverage during those particular dates, like for example this weekend on Friday we're gonna have the non-farm payrolls and the jobs data at the same time, so unemployment rate. So obviously that will bring a lot of volatility to the market. So reducing your leverage on that for that day can be quite advantageous, and you can do that by going to your client portal, selecting trading accounts, selecting the live account that you are going to be trading off of, and going to the little settings wheel, and then you can change your leverage and also change your password if you're in there. The use of stop loss is highly recommended. Okay, it is highly recommended using stop loss. And when you build your trading plan, you want to be able to have things like identifying your trends, timing your entry and exit points, risk management, and having confirmation and validation. All right. Before we get started, I think it's first important that we have a shared common vocabulary for what is technical analysis, So let's dive right in there. Is it just a form of data visualization? Obviously, charting, displaying market data in lots of different data visualization modes is a big part of where technical analysis came from, but you do got to go back a couple of hundred years to the rice pits of Osaka, Japan, for a gentleman named Muruhisa Homa, who invented the Japanese candlesticks as a way to try to capture all of the behavior of traders in those rice pits. We of course advanced the discipline over hundreds of years, and there are lots of different chart types, but what I'm going to argue to you now is that technical analysis is far more than just collecting data and displaying it in a way that we can interpret a lot of information quickly. This is part of it, but if you look at definitions from some of the very early texts from 1920s, 1930s that said technical analysis is about the study of market itself. All of that price action, all of the investor behavior, everything that's happening in an open, freely traded market is part of our discipline. And I love that definition because it is quite broad, and hopefully through today's session you'll understand just how broad and the hope and the depth of study that you'll go through. We also know that technical analysis is a study of that supply and demand relationship. We care a lot about the behavior and psychology of investors, and it's one of the hardest things to quantify when you're thinking about investment decisions. I'll argue that is all represented in this beautiful little element called price, and which we can call it also a systematic evaluation. And systems, the reason I bring this quote is that a lot of us have heard about algorithmic trading, high frequency. You might be an advanced programmer, you might know Python or R or many other languages, and that is an important way to express some of the ideas. But even if you're not a coder, you're not an algo trader, you should be thinking in terms of systems, a rules-based, repeatable approach. And that's something that was drilled to me as I spent time surrounded by some of the best money managers in business, is that they have a defined, repeatable process or a system that they follow no matter what the market is doing. All right, a quick refreshing of your Economy 101 class. Remember, at a fixed rate of supply, an increase in demand is going to move us up the price equilibrium, or a decrease in demand will move price down the equilibrium. So when we're thinking about an open, freely traded market, demand, greed of investors, is inherently pushing prices up, and fear or selling pressure is going to push price down because it's a fixed supply. I want you to hold that thought in your mind because it's perhaps one of the most important parts of the magic that we're trying to unlock here, or the message of the market that we're trying to decode, which is related to learning that if you take emotion, there would be, or there could be, or there should be out of your decision making, and if you look at what is just happening and you can quantify that, you have a big advantage over most human beings. I would argue for all of us in the investment discipline, there's a lot of emotion tied to those trading decisions that we make each and every day, and those emotional impacts on our decision making can be very negative. So the more you can remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. I'm going to stop sharing my screen for a second and start sharing my charts so we can hop right into what matters, the matters at hand today, which is obviously taking a look at the market. All right, in front of me, you should be seeing my charts. You have in front of you a daily candlestick chart of the NASDAQ. You're looking at the bottom. If you look at the bottom at this yellow line showing 24,365.42, that is a 3% correction of the all-time high of 25,026.15. In technical analysis, markets, when we have markets running in such direction, which has been really from the beginning of the month on an uptrend, all month long has been on an uptrend, and it may continuously making new all-time highs. When we have that, obviously there are going to be corrections. We can have a 3% correction, a 5% correction, up to a 10% correction, and that will be normal conditions for the market. Once the market enters a 20% correction, then technically speaking, we are in a bear market. But right now we are in a bull market, and markets are showing us today that continuation of momentum to the upside. Now, could this just be markets rallying to close the month in a positive note, or could this be just obviously markets continue to show that the Fed is the only one that is able to break this pattern or this trend? In reality, it is. We have seen different things coming out of the market to break the market, and it hasn't broken. It has done corrections as we have seen so far, but today the market is pointing again towards that 25,000 milestone that was reached last week on actually last Monday. So chances are that history repeats itself, and that we will come towards this 25,000 milestone again today. And should we consider or speculate actually that the market will continue to push higher? Well, we do have several things that are going to happen this week. The most important things are going to be on Friday, though. On Friday, we have the non-farm payrolls. So if you recall last week, the reason that helped or it pushed the Fed to cut rates was because of that number of non-farm payrolls coming out so low. They were expecting a higher number, but that was actually so low. Consensus has it for 51,000 new jobs added by on non-farm payrolls on Friday, and also the unemployment rate of 4.3% maintains stagnant. Now, should we see something higher than that, than 51,000, I'm talking about 70, 80, 100,000 new jobs, that will most likely put a monkey wrench on the Fed's decision to cut rates in October, and most likely the market will drop. Now, if we happen to have another reading like last month around 21,000, even lower than that, well, we're gonna be seeing markets, specifically the indexes, rally. They all jump. Indexes love interest rate cuts. So we should see if that's the case. If we see a non-farm payroll numbers coming out very low, then chances are that the Fed will cut rates, and therefore we'll see a spike on the indexes. On the vice versa, we do see a bigger number that higher than expected. We most likely will see a retracement on the markets, and perhaps by that time, depending on where we are on the market by Friday, we most likely will see that if by Friday we're not anywhere around this 3% correction value, most likely the market will come down towards it. Will it hit it? I don't know. Will it pass it? I don't know. Will it even do that? I don't know. But let's just analyze that in those scenarios. All right. So let's just start analyzing the market for this week. So we see that there's also another thing in technical analysis. It says you want to have a consensus for the next week of trading on Monday. Look at where the market closed on Friday. If the market closed on Friday on an up note, on a green candle, which it did, and today the market on a Monday the market opens on a green candle, then chances are that will be the week's direction to the upside. So we're looking for, obviously, now that the market will come back, at least to come back and revisit that all-time high. Okay, so chances are that will happen. So therefore, I'm going to use that all-time high as my first level of resistance. Since we don't have anything higher than that in history-wise, well, we can come in and use our trend-based fib extension tool to come in and measure the momentum being done. We take Friday's momentum, today's high, and today's low to figure that out. And and we see that our golden ratio or golden proportion of 61.80, well, actually it's 0.618% of the Fibonacci retracement or the Fibonacci values, which in nature says that everything comes towards that value. So therefore, since it's below our all-time high, that's what I'm going to use as my first level of resistance for today. So we'll have a pretty tight range between the first one and the second one to have. Now, this is speculation. The market, most likely, if we were to open right now, we will be opening on the upside. That would be opening on the upside, would be obviously in the green. So momentum most likely will carry throughout that value. Now, also in technical analysis, we have what's called the typical price. And the typical price can be used as a pivot point or as a level of resistance and support, dynamic level of resistance and support, depending on where the market is. And we do that by adding the high of the day. And I'm gonna do it with today's price so far, because we have obviously London session. And this is from the London session fluctuation. So 24,908.55 plus the low 24,723.55 plus the close 24,884.45 equals divided by 3, and that will give you your typical price or the pivot point, which in this case is 24,838. Which basically 24,838, and the market is somewhere around here. So I'm gonna actually just clone one of these lines and give it that particular value, 24,838.85, and I'm gonna change the color just so we won't have any. I'm just gonna make it orangey. Now let's just make it blue. All right, so this is the typical price for today. All right, that's the typical price for today. So basically we can use this now as a dynamic level of support since the market is above it, and it says that the market should fluctuate around it, up, above, and up and below this value for the price of today. Now, as far as support goes, well, we can either use psychological values, round values, which in this case is 24,600 for me. And we do obviously have, we can also use previous swing lows, or we can use our tool, the fib retracement tool, from Friday's low to today's high, and then identify that golden proportion as the 618 value, and use that as a possible level of support for today. And there we have our levels of support and resistance for the Nasdaq for today. Okay, and we can do the same for all the other assets. So basically, I'm gonna start doing it myself. So again, using the all-time high for first level of resistance. Oh, and our low. So we have that. I'm gonna skip doing the typical price for the S&P today. We can do it ourselves if we want to. I was just doing an explanation of it. All right, so this is my first level of support for today, and my second one, I'm actually gonna use Friday's swing low. That's a pretty good range anyhow. Other values, psychological values, they're just too close to anyhow. Then we have the Dow, which 47,000, that was a parabolic movement. Market just looking to reach that all-time high, that real milestone. Chances for it to come back and revisit it today. Hey, on this day, the market moved really. It opened at 46.692 and it closed at 46.42. So actually gonna close the same, but it had a pretty wide swing, obviously. So I'm gonna use that. Actually, we're gonna use 47,000 again. This psychological. That really is psychological. And then the second level of resistance, let's use our tool because it'll help. Yep, right in the middle. Okay, there we go. We have that resistance, the retracement for support, golden proportion. Let's take a look at other values because that swing low is way too low. So I'm gonna use 46 to 80, giving a bigger range for the Dow. All right, crude oil. So crude oil on Friday hit a high. It retraced real quick and closed in the red. Today open gap down. It had been closed and it continues to push lower. So let's go with the direction of the market for today. So we're buying the indexes and we're looking to short the crude oil market. Now, obviously, all of this scenario regarding Russia, there will be obviously demand if the countries that Trump is trying to push, and honestly the European Union, to stop buying their crude oil. So demand for oil crude oil will continue to be there. I think this is basically just a head fake, and market is just taking a profit on this scenario as market is pushing lower right now as we speak. So there could be, I'm actually going to use today's swing high. I'm gonna leave 66 as is, and then support. Since the market is coming down quite strongly, I'm just gonna lower my support to Thursdays. Actually, this is Wednesday's open, and leave that swing low there as a possible level of support for crude oil. So it's pushing lower. All right, nat gas. Well, nat gas is going to be long term. Is going to be a highly demanded commodity. Reason being, all of the applicable need that we have today, but the AI, all of these data centers, all of this cooling is going to be require a lot of power, and nat gas will be one of those commodities that will be highly in demand. So for nat gas to come in and speculate to come to push higher, that's the side that I'm going towards. Since today we have obviously open gap down, it's been closed. It had a pretty strong position to the upside. Let me just erase this line here. It's pushing to the upside. So $3 again is the target for nat gas for today, and the levels of support. I'm actually going to tighten it up a little bit. 285, basically almost the Thursday swing low, and then 280, second level of support. But we're looking to go long nat gas. All right, gold. So last week I spoke about how soon can gold hit 3,800, because how soon will also determine or will guide us into how soon, how fast gold will hit 4,000. So now that we have hit 3,800, okay, and fluctuating above that, obviously we want to be able to close above 3,800 so we can make it official that we have obviously made 3,800. But however, the market is strong. The geopolitical uncertainty is still there, if not actually is heightening because of the rhetoric between Trump and now against Russia, and obviously everything that is happening that you can read out of the news. So gold will continue to be a safe haven asset. We have obviously the information, central banks buying gold. China continued to buy gold, so everybody's buying gold. And it's by history of human history, gold has been the way to preserve value. So Think about 4,000 by the end of October. So here's something that I'll throw out to you guys: 5,000 by the end of the year. Could that be even possible? It could be. I mean, 5,000. It could be by the end of the year. That could be probably far fetched. I'd rather think of 4,000 being our next milestone target. And if you look at how gold travels, how gold fluctuates, we basically 180 points away from it. Okay, so that is feasible. 180 to reach 4,000. In just today's fluctuation, we already moved 60. So 3 days of this can hit 4,000. But obviously, right now is this is a speculation. So therefore, I'm just gonna use again my trend fade biz extension tool to identify this momentum and see. Ooh, it's just see it's already hit the Fibonacci golden ratio. So from here above, just use psychological values. I'm gonna use 20-point gap difference here. All right. So as far as retracement, well, I'm gonna actually read it from this low because this movement is quite strong, and for it to retrace to no, that's already done. So this isn't gonna work if I use this day. So let's use Fridays, and it's still there. I mean, the Fibonacci values is inside the body. So that tells you that this market has a strong momentum to the upside. I'm going to leave 3,700 as my psychological level of support, and yep, gold being long gold. All right, so silver. We might think that silver is making all-time highs, and it's not. The all-time high for silver is $50.50, and that was made back in the 1980s. 89 and 90s, 1990s, I can't recall right now, but silver high is $50.50. So we're still a long ways from that. So in silver is also going to be something that is the demand of silver is just basically going to stay there, be there. Okay, so therefore, level of resistance. The Fibonacci golden ratio proportion, and then $48, which basically is showing us that is at a right above a Fibonacci value. So there's our levels of resistance for silver. Support. Let's just use Friday's move from Friday's low. Then we have the golden proportion, and I'm gonna use. Oh shoot! Where did it go? Okay, here it goes. And hold on. All right, I'm gonna use 45 for my second level of support. All right, in 2 minutes we'll be opening. All right. As far as copper, copper all-time high is $5.50, around $5.50. So we're climbing. We're looking towards that level on Friday. I mean on Thursday we hit almost $5. We're shy. So chances for this to happen again. So I'm gonna leave 490 is my. Actually no. I'm gonna do 480. First level of resistance, and then Thursday swing high as my second support here. I'm gonna use Friday swing low. I'm gonna leave 460 as a possible level of support for copper. Looking to buy the metals to stay long the market, so looking for long entries. All right, Bitcoin. Well, Bitcoin moved by thousands, and look, this candle opened at 113 and it closed at 109. That's why I say move by thousands. So I'm gonna leave the same levels of support and resistance that I had from last week. They were even they were even met. All right. So the currencies, the euro. I'm looking at the euro to climb back up to 118. I'm gonna use this swing low as a possible level of resistance, and then support. Okay, well, we see a nice fluctuation to the upside, and I'm gonna leave that level of support, and I'm gonna actually just use this double bottom here that it was created last week as a second level of support. The pound, looking for a rebound, so 135, leaving the same level of support that we see here, looking to go long also. And dollar index 98 has been a level of resistance. All right, the market is open, and I'm going to speculate another leg down for the dollar index. All right, now that I have identified my level of support and resistance, and we see the market fluctuation opening, I'm going to break it down to 1 hour to see what the market has been doing for the last hour, because we have 30 minutes left on this candle. So in the last half an hour, the market has fluctuated to the downside, obviously making a nice little run to the upside and making a ceiling here around 24,900, giving it that psychological level of resistance. It's pushing lower. So let's see. This blue line is our typical price, right? Our pivot point. So let's see if it'll be able to sustain itself, to hold the market, and the market rally or rebound from here, reversal from here, as it will act as a dynamic level of support. So market is pushing lower in the last half an hour. Strong push downwards on this half hour on the S&P. Also making a ceiling or triple top, or quadruple top, around the level of 6,700 and change, 730. Oh, whoa. Okay, so this is a strong fluctuation to the downside on the Dow. 46,600 initial level of support, psychological support. Obviously, first hour, on Monday, first fluctuation, profit taking is in place. So let's see what will happen. Crude oil pushing lower. There is a correlation between crude oil and nat gas. So when crude oil drops, nat gas. Crude oil and Nasdaq. So when the crude oil drops, Nasdaq should spike, and vice versa. In a normal market, here we have nat gas looking to for a nice fluctuation to the upside. I'm still waiting, obviously, for the market to settle. Just 15 minutes, half an hour into the opening. We have gold here. Nice momentum to the upside on the last hour. Also for silver, momentum to the upside being built. Copper as well. Bitcoin is just sideways trading, ranging in the last hour. So euro. So in the last hour, it fluctuated to the downside, and now it's recovering. So it's actually pushing higher, or actually recovering, at the same as the pound, and the dollar index should be dropping. Not that strong, but it should be continue to drop and change this to a red candle. Let's see what will happen. Right now that we have, I kind of have a reading of the market. I'll break it down to 5 minutes. I'm gonna turn on my fractals, and I'm gonna turn on the VWAP. So the VWAP stands for volume weighted average price, and this is one of the indicators that is not lagging. The other indicators are lagging indicators. This one isn't. This one gives you the typical price or the range where the highest volume has been created around that price. Hence the name, volume weighted average price. So the average weighted average price happens to be the what we said the typical price. So you see how strong, how good of a information is to come out and you find out the typical price for that period. And the typical price you can change it for an hour if you're gonna do an hourly trade, or you can go down to 5 minutes and do that typical price for 5 minutes on the previous bar. So on this previous bar, where will the typical price be? Well, it's gonna be the same one because it's just basically that. Now let's just do it for the exercise. So we have 24,888.25 plus below 24,846.25 plus the close 24,851.25 equals, divided by 3, 24,861. So it's gonna be somewhere around here. All right. Anyhow, so the way that I like to trade the VWAP is reversal of the VWAP on an uptrend, reversal of the lower band, okay, and once, if we were to be obviously on a downtrend, then reversal of the VWAP and reversal of the uptrend. Now, once we have the market outside of the VWAP, I'll turn on the Bollinger Bands just to show me how much of volatility is being created on that, so I could enter a trade. Because if the market is outside of the band, it will give you away from the VWAP, which is the blue line. It tells you that the market is an uptrend. It's a strong uptrend, so you should be looking for entry long. At this stage, the market is basically we have 6 minutes into the open. I like to wait to see what the market does, so let the dust settle and just be able to get ready to enter either a reversal of the VWAP or reversal of the lower band, as we have here in the S&P. So the market has a strong push to the downside. The first attempt at the VWAP was rejected. The market did rebound off of it, but then it continued to push lower. It penetrated the VWAP. In this particular case, we could probably continue to see the market push it even lower. So my first, since we have 3 minutes into this candle, my first indication will be where this candle closes. If the candle closes above the VWAP and the next candle closes with a gap up, I'm going to speculate that the market is doing a reversal, and so I'm looking to enter the market long, and my target will be the upper band. But I have to wait for this candle. This is the confirmation will be that if this candle right here closes above the VWAP, right, and the next one closes with a gap up or at where the previous ones close, I'll be entering the market long. Now, if the market decides to continue to trend lower and penetrate the VWAP, in this particular case with this candle, this behavior, this price action, I will wait for the market to close below the VWAP, and the next candle that opens, I'm looking to see if it opens with a gap down, or it opens where the previous one is closed, and I'll be entering the market short, targeting the lower band. Okay. Now you could also just apply other strategies that you may have in your arsenal, but one of my strategies, that's my strategy in that case. Some people may use the Bollinger Band and see if the band has been squeezed, if it's a reversal of the median. But in this case, we see that another thing that you can use for confirmation is if the Bollinger Band, if the market is walking the lower band, which in this case is. So chances for this are growing now that this candle will close in the red, or below the VWAP, and then the market will continue to push lower, just a stronger correction. So let's see if that will be the case. We have 50 seconds left on this candle. Possible entry short, depending on where this candle enters or closes. Sorry. So let's see. Is making deeper momentum into the VWAP. So let's see where this candle will close. If it closes below the VWAP and opens next to it or below it, it's a good valuation for me. So I'll be entering the market short. So in that case, I'm going to do a short position. Getting ready to do that short position. Let's see where this candle will close. Strong momentum to the downside. And it's going to close obviously below the VWAP. So let's see where the next candle will open. And then the candle opens. Oh, opens gap up. Open gap up. So chances for this candle to move higher. Well, let's just enter the market short anyhow. Because it did close below the VWAP. All right, so that's my target. Now my stop loss, again, using your percentage wise. In this case, I'm just going to use the swing high of the previous candle. So my target is the lower band. So I'm gonna leave that there and just take a look at other assets. All right, so in this case, we have the market already fluctuate outside of the VWAP, so there's no point chasing it. All right, this to me looks like a typical dead cat bounce. So chances for a short position here. I'm gonna enter where the market is. All right, so using this as my stop loss target for this will be 63.80. At least giving myself a actually 1.5 or even more. All right, I'm going a ratio, risk reward ratio 1.8. I was looking for 2, but I think that's going to be good enough. This is a dead cat bounce for me, so that's why I'm entering the market short. Nat gas, like I said, I've been long nat gas. The market has already fluctuated outside the VWAP. Let's turn on the bond to see what. All right, so the nat gas is walking the upper band. So if you are a risky and aggressive trader, you might as well enter long and target $3 psychological value. That's where the market is heading towards. It's been heading towards that value. And most likely it will get rejected, and obviously profit taking will take place. But entering long right now is not a bad idea. Drop the VWAP and the Bollinger Band again. All right, gold as well. Gold here entering the market long, since the consensus is anyway to the upside. Now, since we are inside the Bollinger Bands, the market is still inside the Bollinger Bands, you could, if you want confirmation, you could wait for a pullback, okay, on gold. Is making all-time highs, and it's just making, right now that's what it's doing. So can we contemplate the idea that the market will do a pullback towards the medium, and then from here just rally? That could be the case. Okay, that could be the case. So, and we have the golden proportion of 38.40. Was it? No, it was just our value that we chose. So 38.30 is will be our first target if you have entered long. Then let's take a look at silver. All right, so silver in this time frame, nice rejection. So market did drop, and the VWAP was rejected. So chances for this candle to continue to push lower is being shown. So will we do another reversal of the VWAP? If you've done it once, you've done it twice. So in the last 20 minutes, it's been here twice, and if this momentum comes again a third time, so we could look for a reversal of the VWAP. So market fluctuates, pulls back, fluctuates all the way down to 46,700 ish, and from here reverses, and we enter long. So we gotta wait for that one. Copper, oh, nice breakout. That would have been, this is a equal highs, equal lows, the perfect setup for a breakout or a breakdown, but direction was to the upside, so it broke to the upside. Nice momentum to the upside being built. Oh, look at Bitcoin. I told you Bitcoin moves by thousands. See, Bitcoin moves by thousands. So it's pushing higher. 114 is a target. The euro outside the VWAP. We don't have anything yet to use with the VWAP. So recovery for the euro today, this week, most likely hitting 118 again. 135 long term, well, the short term target for the pound. Dollar index, we want this puppy to drop and continue to drop. Okay, let's take a look at the Nasdaq fluctuation to the upside as it was expected. So 25,000, or at least our target is 25,000 for today. Recovery up. So this trade is done. We got stopped out. It did penetrate the market, the VWAP, but didn't do that much. So that was out. That was actually pushing lower. Let's see how our crude oil trade is doing. So we're still in the crude oil trade. We want, speculating that this is a dead cat bounce. The market will continue to fluctuate to the downside. We still have time in it. We're still in it. We haven't been stopped out. Let me just make this as a stop out, just to identify the level. All right, nat gas pushing higher, pushing higher, pushing higher. Gold, finally, that pullback. It was expected. It's expected a pullback. See, but the thing, we don't know when the pullback is going to happen. So here, in this particular momentum or fluctuation, I have an opportunity to share with you another strategy. So the reason that I use fractals is to identify, obviously, the last fractal low and the last fractal high, and obviously the swing lows and swing highs. But from here, I'm gonna use my field retracement tool, catching that fractal low and that swing high, right? If you look at the chart, you'll see that I have different values, and they're not really different, but they're the same one. But the different ones are above. These are the already retracement values that you will have on your tools, but I have added mine. So I use this tool in this way. When I identify a strong momentum to the upside, a strong rally, which this one is, we understand that there will be a pullback, correction, retracement, such as what it's doing right now. Since we have created a new all-time high that was speculated, chances for this moment or this pullback to be reversed or for it to stop and continue this previous move initially is that 0.38%, that 38.20%, that we see that if there is a strong rally, a strong move, which we have seen, if this is to be continued, then the 0.38% will be the first level where the market should find that support, meaning that those buyers that will reverse the pullback. So this is profit taking, and that profit taking will give the pullback towards the 0.38%, which is basically where it's at, where is rebounding off of. So we want to be able to identify that if we are aggressive enough and we have entered the market long from this point, this percentage in these colors yellow, then our target will be that yellow line, or in this case will be the golden proportion 61.80 or 0.618%. But if the market happens to penetrate even further down, do a deeper pullback, like it's doing so far, then we understand that between the 50 and the golden proportion is what the market should come down towards and find that support and reverse the market and continue its trajectory higher. So we see that the market is doing so fluctuated and now is doing that pullback. Now, is this going to be the moment where we enter the market long? Well, the market is actually penetrating that value. It could just continue to penetrate, or it could just reverse. But this is a strong pullback. Again, profit taking. It's already fluctuated back toward the all-time high, the previous all-time high. So will this be the moment where the market actually just retraces and continues its trajectory? Because it already did penetrate the golden proportion, but we do have other values. So if the market hits our 78.60% retracement, then our target will be that level, the blue line, or 27.20%. If the market continues to penetrate and hits our 88%, 60% retracement, then we could say that the market will hit our 1270%. So if we enter the market here, then that's our target. But the market is happening that is pushing back. Well, let's see if we actually measure the entire movement from a fractal low, from the previous fractal low. And in that case, well, the market is basically at that 50%, right? But I did it from the previous low, from the next fractal low. But direction for the market is higher anyway. All right, so with 50 minutes, with 20 minutes into the opening, we see here silver pulling back. Okay, this is probably a setup for a reversal of the lower band. Let's take a look at a crude oil trade. Here it is. Here it is, our crude oil trade. It's pushing lower. I'm gonna stay in this trade actually. Let's see how much lower will it push. I mean, dead cat bounce. We're in the profits here in this particular trade. So again, you want to use your psychological value 63.80 as a target, next target. I mean, the ultimate target is 63.70, but the market is pushing lower strongly. So let's see, and that should be met within the time frame that we have here. 2 minutes left. I'm actually gonna clone this line and just put it there. 63.80, and make sure that that's our next target in this trade. So we hold the trade, and now since we are already below our entry obviously, and we're making a profit, I like to, once I'm in the trade and I'm profitable, I want to protect my earnings, my winnings. So I look towards my left, my lowest low or my lowest fractal, and I'll place my stop loss there. So if the market happens to do a whipsaw and reverses and makes out one of those wild swings, it'll take me out, it'll stop me out, but I'm already targeting, I'm already protecting this profits. You could do it in different ways, however you want to. You can count 2 candles prior, also 1, 2 swing low, it'll be here. But I like to do swing lows like the lowest low that I see. So in this time frame here in this screen, this is not the lowest low. This is the lowest low. That's where I place my stop loss. And then once this candle closes and the next one opens, then obviously I'll bring down the my stop loss to a psychological value, just to protect more earnings, my winnings. Okay, I mean, you're already in the trade. You are in the green, so why give money back? I mean, obviously, I'll be giving a lot of money back if the market was to close now. But having been at a distance, a safe distance, is not bad. So 63,940 will be my next level where I'll place my stop loss. As the market does push lower towards my 6380 target, my ultimate target is 6370. But let's see where this candle close. It's pushing lower, pushing lower, pushing lower as we speak. And 10 seconds left, 9 seconds, 8 seconds. Let's see, 5, 4, 3, 2, 1, and boom. All right, so now I'm gonna move my stop loss 63940. There it goes. Somewhere around there. All right, and then looking for my first initial target 6380. Here I can either take out, close my position and the profits, or I can add to my position if I'm feeling that confident or borderline greedy, because the ultimate goal is 6370 in this for this. I mean, obviously we have our support at 63.505, but I want to go by levels. I want to be able to first hit this particular level, and this gap actually opened gap down, so that tells me that there's a strong momentum to the downside being built here on this asset. Yeah, it was meant to be closed. Ooh, see those swings, those swing highs. Oh, maybe perhaps that'll be it for this particular time frame. Let's see. I'm gonna bring down my stop to a swing high, since I see that this candle is getting mighty strong. So I don't want to lose out more. Right? I'm covering my particular profits here to get stopped out, or my take profit is hit. My take profit is 63.70. So this move to the downside for the last 15 minutes, a lot of people made money. So this is profit taken. This is basically profit taken. I'm going to speculate that our first level of support that was hit, now resistance, that's what the market will come towards now, and it'll find that resistance that we're talking about, or maybe not. It'll just continue to push lower. That's basically what we want, since we are in the trade. So pushing lower, pushing lower. 6380 is our target. We still have 2 minutes left in this particular candle. Let me do a sweep a sweep of the markets. All right, so here, fractal high, market bouncing off the upper band. Nice position to the long upside to be long, and then we have gold made that pullback. It's getting ready for another leg up. Ooh, silver just continue to push lower. I would have loved for this candle to have hit the lower band to enter long, but it didn't. Copper, nice rally to the upside, 480 right around the corner. Bitcoin, all right, another setup for another breakout or breakdown. The euro, the currencies. Oh, come on, dollar index. I think dollar index is it's catching a bid. Let's see. Yep. It is catching a bid. So that will put pressure on the metals and obviously on the currencies. Let's go back to the Nasdaq and see how close is it to getting that particular price, that particular value of 25,000. Yep, it's getting there. We first want to be able to fluctuate above our initial resistance. S&P, again, reversal of the or the VWAP, and Dow has it found its bottom here? The Dow is it getting ready to turn the corner and start pushing higher? Maybe not. Oh, our crude oil trade. We might get stop out in this 30 seconds, 35 seconds. Let's see what will happen. Again, this is profit taken, but we're in profits. We are in profits. This is our stop loss, or stop, that's swing high, and we're in profits. We basically are in profits. If you enter above here at around 64.02 or 64. So 64, entering at 64, exiting at 63.908. That's not a bad trade. All right, so the market is looking for another leg down. Will it do that, or will it reverse? That's it for me today. It's an hour for this session. I want to thank you for watching, staying with me, Abdul Fabrice. Every single day, Monday to Friday at 8 a.m. We'll be doing this analysis, looking for trades, entering a hypothetical trade, as we did. We had a losing trade, we had a winning trade. Okay, so we're breaking even in a way. This trade is still on. We haven't been stopped out. Our targets are 63.80 and 63.70, our final target. So let's see what will happen. All right, guys, that's it for me today. Thank you for watching, and I'll see you tomorrow. Have a great rest of the day. Bye now.